Welcome everybody to TradeGateHub.com. I'm Dale Pinkert. We are sponsored, powered by TradeView Markets, and I have a great guest for everyone today. His name is Pavel Hala. Pavel, welcome to our community at TradeGateHub.com. Great to have you.
Hi, Dale. Yeah, thank you for inviting me.
Well, I've done over 1,000 interviews, Pavel, and I have a pretty good memory. And I want to acknowledge that in our past interviews, I believe the first interview you came in with ideas in natural gas equities way before the nat gas story became headline news. It was a successful campaign.
Sure.
And then you followed it up in April where the market really started to, after a bounce, really start to accelerate to the downside. And you were talking about VIX back then. And then you came in, and I was so excited because I was bearish copper too that I go, well, Pavel's good. That almost gives me more conviction about it. That you thought copper was peaking and was headed for a slide, which it did. It was well before the $4 breakdown. And so your forecasts have been stellar. So I know it's been a lot of choppy stuff going on here. We talked before this started, but what's your overview with what's happened here in the last 24 hours? There's been intervention in the yen. The Fed moved yesterday. I believe you think that was a non-event, but why don't you tell us what's on the menu at spreadcharts.com?
Yes. Well, my general outlook, medium-term outlook for the market hasn't changed. I have acknowledged, since the beginning of this year, that we are in a bear market, and I kept this, opinion or outlook since then. I haven't changed my mind. I still think the bear market has more room to run, both in price and time. However, there have been many bear market rallies. So if we focus on the short term, I think that, or at least the data suggests that the market will rally. Maybe I will show you one chart that I frequently use to determine the market regime. It's the medium-term volatility, because unlike the short-term volatility, which means the near-term VIX futures, the medium-term volatility is less noisy and I think more important. Well, I can describe it with a single line, because you can see that the medium-term volatility, the fourth VIX futures, is a continuous price chart, so it is just some artificial time series. You can see that this curve was making higher lows since November last year. That was also one of the reasons why I was so bearish at the beginning of this year. And that has changed since June. Since the bottom on equities in June, the medium-term volatility is in downtrend. And even though we are currently selling off on equities, the medium-term volatility failed to react in a meaningful way to this sell-off.
Why do you think that is? People are saying the VIX is broken, Pavel. Is it just because every decline that we've had, even though we've gotten to 32, which probably is analogous to the 30 area, 29 area on the VIX that most people follow, is that the declines have all been orderly and we really haven't seen any panic? Or is it maybe the possibility that might be a bullish signal? Or are we going to trade above that 28 level, close above it, and then have a real washout? Tough call for me. I know VIX buyers, especially call buyers, probably real disappointed that even though the market sold off dramatically this year, 20% or more for the averages, you never got more than 29 on the VIX.
I think the relatively low VIX levels are connected to the clarity in the markets, because VIX is not about direction. Yes, it is about pricing the unknown, and there is a little unknown right now in the markets. We know the situation is bad, basically, and it's well known because the Fed is very clear that it is gonna hike interest rates, and there is little to no systemic risk. If you take a look at credit spreads, there is not much action out there, and that's, in my opinion, is the reason why the VIX has been relatively low. It will go higher once something starts to break, which I think will eventually happen if the Fed continues.
Well, do you think that intervention by the BOJ is a symptom of things cracking? Because they haven't done this in a long time. And, and could it be the beginning of more interventions, not only by them, but perhaps by other central banks to stem the dollar's rise?
Definitely. I think that's the first sign of problems, but it's just too little. When things start to get really bad.
Well, what do we need, Pavel? A tactical nuke to go off in Ukraine?
I don't
think. For
think.
the VIX to get back to 32?
I don't think it will be associated with political risks rather than economic risks, because we are talking mainly about the volatility, but I think the catalyst will come from the FX market, from the currencies. The strong dollar is definitely incompatible with many economies, especially the emerging market economies, because it is not only making their imports more expensive, but it is also crushing their industry. So it's a double-edged sword, and it cannot continue indefinitely. On the other hand, these FX trends tend to be very persistent. So I would really avoid trying to call the top on the dollar, although...
well, why didn't you tell me that a year ago?
Yeah, I mean...
But there have been some trades that have worked out. It's interesting, that you could be wrong on the trend, but if you have the right tools, you could actually trade counter trend and just lower your expectations, because, may just be a pullback, but this candle that we're looking at in the dollar index, and especially US dollar yen, I think might be significant. And I know that you follow some esoteric things. What's interesting? Everything that happened yesterday, it was the equinox.
Yeah,
I didn't think about that. You're a GAN aficionado. He made a big deal about the change of seasons and potential change of market direction. So we had some inflection points on the equinox. I find it interesting. Yeah. So
yeah, in the short term, I'm definitely bearish the dollar, simply because it has run too far for too long. But I would not try to. My conviction is really low. I would not try to time this. When I have some, or when the data says something about the market, I do not try to go for the largest market or necessarily the most popular market. Instead, I try to identify inefficiencies in other markets, and there are some inefficiencies and much better opportunities elsewhere. So I would avoid shorting the dollar, especially because I think the long-term trend, uptrend in the dollar is far from over, despite any short-term weakness we might get.
Interesting. Because, so go ahead.
Yeah, I'm not so old, but you probably remember 80s, and it was only after the Plaza Accords that something changed,
Right. Right.
And it was a global, synchronized,
Right.
intervention. And we are
Unlike
far
yesterday.
from that. Yeah, unlike yesterday, it was just
Right.
one central bank, and it was very weak. So we are far from that, and we need much higher dollar levels and much more pain for something like that to happen. And so that's the reason why I remain bullish dollar in the long term, but I'm bearish or I lean bearish in the short term. So even if you look at the monthly chart, the dollar is still in uptrend, and we may retest
Powerful.
this breakout. It's well possible. So the dollar index may go down to, I don't know, 105 or even 100
Yeah, that'll
itself.
be important to check the breakout.
Yes.
Okay.
I don't know, that can happen, but in the long term, I mean, the path of the least resistance is still higher. Nevertheless, speaking about the ethics, I like the euro in the same way as you, because mainly because of the energy markets. Here's the chart I shared on our Twitter, I don't know, few days or maybe weeks ago. The first subchart shows the euro, basically the futures on euro. Yeah. And the bottom two bottom subcharts. The first one is inverted TTF Dutch net gas prices. And the bottom subchart shows the inverted curve for EU ETS, I mean the carbon emission allowances. So you can see that the gas prices have been going down, and even the price of the emission allowances is going down. So these two things, especially the gas, acted as a huge tax on the European economy. Moreover, the ECB is finally turning bullish. It's too late, but still better than nothing. So that's the reason why I like euro in the short term. So that's probably something that will have also a significant impact.
Back to 105 possible? Do you have any objectives for this swing where you would be happy with saying the trade is over?
I mean, I prefer always to look at the current market data. I hate doing this setting these profit targets.
Nostradamus.
No, yeah, but I definitely think that 1.05 is possible, even 1.08. Yeah. These are the two levels I will definitely watch, but 1.04.
That'll take the Dixie back to 104, 103. Yeah. If you get 108, 109, that was a big breakdown area. Mm-hmm. Okay, so thanks. I know you probably weren't planning to talk about the dollar, but let's talk about something that even stock traders can trade now. There are all kinds of commodity ETFs, and people rarely talk about the softs. So I'm assuming you're seeing something in sugar, and I remember 5-cent sugar. Pavel.
Sure. Basically, my opinion is that much better than trying to trade the dollar or equities that are volatile as hell right now, it's much better to look at markets where the volatility is lower, because that allows you to enter trades with a much better risk reward.
Yes.
So that is the first reason, and the second thing is that I try to look for pockets of market with strength. For example, last time we talked about metals, and I was bullish metals in the medium term, but I told you that personally I would avoid any metal back then besides palladium, because palladium was the only metal that was showing relative strength against all the other metals.
Right.
I only turned bullish silver at the beginning of this month, for example. We shared that on our Twitter. But the point is that palladium did really well, simply because it was the strongest metal out of those 4 or 5 back then when we made the last interview.
So
Yeah,
I heard my last interview a week ago, the guy said he would learn from a trader that the white stuff goes first. So,
that's smart, definitely.
and platinum also has a decent look to it. And from what I've heard, palladium will continue to be the outperformer, followed by platinum, then silver, then gold, then copper.
Hmm.
So,
Sure, sure.
that's the shift.
Yeah, that definitely makes sense. The only problem in palladium is that it's very,
Thin.
it's quite illiquid. Yeah. So, I mean, it can move like crazy. So that's something to keep in mind.
Yeah.
But otherwise,
Do you have to call anyone and make an appointment and say you want to make a trade
yeah, I know
in
what you mean.
palladium? Do you have to make an appointment?
Yeah, yeah.
Sit in the
Uh,
waiting room. Okay, we're ready for you, Pavel. Oh, okay. Here's my mouse. I'm in. All right.
Yeah,
So
so I just opened the relative performance of silver, platinum, and palladium against gold. I don't know when we spoke together last time, but I guess it was in July,
yeah,
and palladium was the only metal that was outperforming gold and was
yeah.
making higher low on a relative basis. So that was the reason I liked palladium and avoided other metals. And you can see that it worked pretty well. So let's move to the softs, because the idea is very similar to to the palladium back then, because I can see some good opportunities in soft commodities, simply because the volatility dropped down and they are showing relative strength, especially sugar and maybe cocoa, but sugar is probably my favorite market right now,
It's a great
because
inflation hedge. I've seen it have its bull markets before and
yes,
bear
it's
markets.
somewhat correlated also with the energy markets due to the
Oh, yes.
biofuels and stuff like that. If you also take the high nat gas prices into account, that also has an impact on sugar, especially in Europe. But I do not. I have to say, I do not understand these markets. I'm basically a newbie
Okay.
regarding soft commodities. But what I like about sugar is that the market has been, I mean, the price of sugar has been moving sideways since August last year.
Yeah.
But there was a huge reset in sentiment. You can see the commitments of traders data below, and the
Yeah.
curves have basically inverted. The sugar market, from the positioning perspective, is oversold. But we didn't get any correction in price. So the
It was
correction
all in
was,
time. It was
yeah,
all
the
in time,
correction
wasn't it?
happened in time, not in price. And it's a
That's more
huge,
bullish.
yes, that's a huge sign of strength.
Yeah.
So that's one of the reasons. Also, the seasonality is starting to look good on sugar. You can see it from the seasonal curves here, but mainly the volatility, the drop in volatility is what makes me really positive about sugar. And I also repeatedly shared on Twitter the signal from our machine learning model. So this is the bull spread on sugar, and I would probably
Is it in
pick the,
backwardation?
yes, it's in backwardation because the value is positive. So
Okay.
I think it looks really good. So I have to agree with our model. And keep in mind that it's a machine learning model, so it's unbiased. So that's always good to see when you have an additional confirmation by someone else or something else that doesn't take your own biases into account. And personally, I
Oh,
like this spread a lot. I think
okay.
it's even a better way to trade than the underlying
So you're
sugar right
long
now.
the March 23 and short the deferred July.
Yes, it's long March, short July,
Right.
and Yeah, I think it's a good idea how to play sugar. The second market I like is cocoa. It's also oversold. As you can see on the commitments of traders data, it's even more oversold than sugar. But the price action is not as nice as in case of the sugar market. That's true. But we got a breakout on cocoa, so the price is consolidating above the breakout. The spreads, I mean, the intra-delivery spreads in cocoa are strong. You can see the divergence between these bull spreads, which is the blue curve, and the underlying, which is the purple curve. So
is there an FX relationship considering what cable is doing when it comes to cocoa?
I don't know. Frankly, I don't
Okay.
know. I'm no expert on
know
softs
that
from the,
okay.
To be honest, I don't understand these markets. So
it's okay to say I don't know.
Yeah,
I mean, it's wisdom to say I don't know. And I had another question. How often do you have to change the oil in your machine learning machine? Is it a machine?
No, it's it's a joke. Sorry.
Why did they call it?
You got me.
Machine learning if you don't even have a machine. What is?
Yeah, it is a machine. It is trained on graphics cards, and so it is on computers. Basically, it is a machine, but
you don't have to wind it up or anything like that.
No, it's software.
Start it up. All right.
Yeah.
I'm just kidding around with you. So you like the softs here, and you know what I've noticed about it? You're not swinging for the fences. A lot of these trades offer, nice profit potential with low risk, but you're not trying to call it sugar for a 20-cent move, and you just want to take advantage of the spreads. You could go to sleep at night because you're both long and short, just trading the direction of demand. And I've noticed your conservative nature serves you very well in a high risk environment that we walk upon in these markets. So I appreciate you finding these little niches. It tells me that you spend a lot of time going over everything to find the diamonds in the rough, which is what I think you are when I found you on Twitter. So anything else you wanted to talk about with these two?
Oh, probably not. I mean, the main message is that because I have received many questions about where the S&P is going, where silver is gonna go, when the dollar is gonna, what is dollar gonna do in the coming days and weeks, and everybody is interested in these, macro-sensitive markets, and the volatility there is brutal. You saw that yesterday with the FOMC meeting. It was crazy on S&P.
Oh, yeah.
So, and that's the reason why I tell people avoid this. If you do not have any edge there, if the volatility is crazy, your risk reward is not appealing. You will lose money no matter if you are right or wrong, simply because of the volatility. So look for the markets, and that's a great advantage of commodities and intradollar spreads, especially because you can find markets where the risk reward is much more appealing. That doesn't mean you will be right and you will make money, no. But if you lose, the loss will be much smaller than the potential profit, and that is truly game-changing in trading. So I don't know, maybe I will be wrong about sugar and cocoa, but there are some other markets that are interesting right now, like lumber and some other, like grains and so on. So you can open up our software and browse the data yourself, find the interesting opportunities.
It's spreadcharts.com. And go ahead, show your website.
So you can go to spreadcharts.com, I hope. Yes, here we are. That's our homepage. You can sign up for our software that offers analytics like charts, seasonal data, sentiment data, but also as I said, the signals powered by machine learning, which can save you a lot of time looking for the good opportunities. It is not a trading system. I would strongly discourage anyone from trading based on these signals, but it is a great way to save time with analyzing dozens of markets and hundreds of intra-delivery spread combinations. So you can sign up for our software. We also have a free version, and it's not just some demo version. In the first, basically all the data, and you can access most of the charts. Or you can sign up for the premium version where you will get some advanced features like some statistical charts, the signals, and also our premium research. The idea of our premium service is not that it will make you a great trader, because you can only learn that yourself. There is no service that can make you a great trader, but our service is designed to save you time with analyzing markets, browsing, dozens of charts every week. So that is a great benefit. And, you can see that it's really, really cheap. So if you value your own time, then I think even our premium service will be very helpful to you. So.
Okay, well, Pavel, I invite you to come in and post anytime you'd like in our main chat room at tradegatehub.com. And
great. I will sign up.
anytime you want, you just have to register and come in and post your stuff. We're getting more eyeballs in here. We don't sell a subscription, so we're not competitors. And it's a free place for people to come and exchange ideas. So if you want to share your ideas, you're more than welcome to. And I want to thank you for, really, you did a lot of great coaching and mentoring besides analysis here. It's all about risk management. It's a one mistake business, and your style is all about preventing making that one mistake. So I think you're providing a great service and the right type of psychology for people.
Yeah, thank you. I mean, I learned it the hard way because, I was trading during the last recession in 2008. And I made some losses. I was trading options on Russell, and I made some, large losses there. But in the end, that year turned really profitable for me, thanks to the interdelivery spreads in grains. I was more lucky it was more of a luck than skill back then. But still, it taught me a lesson that it's much wiser to avoid popular things and look for markets that offer some advantage.
So Pavel, always looking under the surface of what everyone else is seeing, and I recommend you follow his work at a minimum on Twitter and check out his work, because I've seen his forecasts manifest. So thank you, my trading warrior brother, for your time
thank you
today.
Thank you for inviting me.
I'm a fan, and I'm rooting for you. Have a great fall trading season, buddy.
Thanks.
Thank you very
much.
Thanks,
Dale. Bye.
All right, that's a wrap, everyone. I'll see you Monday. Just a little update. The yen did have to take out 45 first before it reversed, and been talking about that for a while. And take a look at sugar and cocoa and follow Pavel. I am only bringing people here that I think are going to give you an edge, and he's one of them. So that's a wrap. Have a great weekend. I believe Mike will be with you guys tomorrow. I'll see you Monday.